everyone, and welcome back to our 15 minutes tax-savvy small business live. I'm so glad you're here because today we are talking about what I like to call the secret fourth way to take money out of your business. Completely tax-free while still getting a full business deduction for it. Most people know about the three usual ways to pull money out: salary, owner's draw, or a combination of two. But the fourth way is one of the most powerful ways to pay yourself. It's through what's called an accountable plan. Now, don't let that term scare you. It's super simple. It just means your business can reimburse you for legitimate business expenses that you personally paid for, and that reimbursement is completely tax-free to you. The business gets to deduct it, and you get the cash without paying a single dollar of income or self-employment tax on it. Let's break it down because that's where it gets fun and valuable. Think about all the things you're already paying for personally that actually benefit your business, like your home, your car, your phone, internet, cleaning, maybe even hosting business meetings at your house. These are all opportunities to legally move money from your business to your personal pocket, tax-free, through reimbursement. Let's start with one of the biggest and most missed opportunities: your home office. Everyone heard about the home office deduction, right? But here is what most people completely miss: the depreciation part. That's where the real money is. See, when your business reimburses you for using part of your home, it can reimburse not only for things like rent, utilities, cleaning, but also for depreciation, which is basically wear and tear of your home. And that's the best part. Depreciation is a non-cash expense. You don't actually pay that money out, but your business can still reimburse you for it. This means you are literally moving cash from your business to yourself, tax-free, for an expense that you didn't even actually pay. Let me give you an example. Say your home is 2,000 square feet and your office is 200 square feet. That's 10%. So your business can reimburse you for 10% of your rent or mortgage interest, 10% of your utilities, your cleaning, and yes, 10% of your home depreciation. Now, let's say your home costs $500,000. The depreciation on that could be around $18,000 a year. 10% of that, if your home office is 10%, is $1,800, and that's just from depreciation alone, cash that you never actually paid out as expense. That's $1,800 of cash that your business can pay you tax-free just for letting it use part of your home. And you didn't actually pay, as I mentioned, those $1,800 to anyone. It's just a paper expense. But you still get the cash. That's what I call a beautiful tax-free transfer. And you can stack on that with everything else, like rent, utilities, internet, portion of cleaning expenses. If someone comes to clean your home, even your cleaning costs can be deducted, portion of it. So your business can reimburse you for that as well. Let's say, again, someone comes to clean your home, but 10% of your home is your home office. So 10% of the fees you pay to the cleaning person would be reimbursed to you as business expense. All right, let's talk about another big one: your car. Your car is a huge opportunity, but it's also where people mess up the most. Here is the rule: you can take depreciation on your personal vehicle if it's used more than 50% for business. That's the magic number, 50%. If you're below that, no depreciation. If you're above it, full access to depreciation, including bonus depreciation or Section 179, if it applies. So the goal is to make sure your car use is over the 50% line. And here's the secret trick. If you set up a legitimate home office, your daily trips from your home office to meet clients, visit job sites, go to the bank, or pick up supplies all becomes business miles instead of commuting miles. Without a home office, your trip from home to your first client or your other office is commuting expense, not deductible. But once your home is your principal place of business, that same trip becomes a deductible business mile. That alone can easily move you from 30-40% business use to well over 50%. And now, boom, your car qualifies for depreciation. So let's put some numbers to it. Say your car costs $50,000. If you use it 60% for business, that's $30,000 of depreciation your business can reimburse you for. You get reimbursed those $30,000 tax-free. And the depreciation rules for cars are tricky, so you need to check this because it depends on the type of the vehicle that you drive. This is just for example purposes. This is not illegal tax advice. So you get reimbursed that $30,000 tax-free. Your business deducts it or whatever the applicable amount to you, and that's real money that's staying in your pocket. And of course, in addition to depreciation, your business can reimburse you for gas, insurance, maintenance. So, but that depreciation piece, that's the one that really moves the needle. That's the big piece of the cash that you can move tax-free from your business to your personal pocket. Now, let's move to your phone and internet. Most business owners use their phone for work all day. Calls, texts, client apps, social media, navigation, everything. If you use your phone 50% or more, you can reimburse yourself for that percentage of your monthly phone bill. And if you bought your phone outright, your business can reimburse you for the depreciation of the phone itself. Same with your internet. If you use it for your business can reimburse you for that portion tax-free. And now my favorite one is the Augusta rule. This is where you can rent your personal home to your business for up to 14 days per year, and the rent your business pays you is completely tax-free. You don't need to report that income to be taxed on your personal tax return at all. Let's say you host business meetings, strategy sessions, or client appreciation events at your home, and your business can pay you the fair market rent, let's say $1,000 per day, for up to 14 days annually. That's $14,000 in your pocket tax-free. The business gets to deduct it as a legitimate business expense, and you get to keep the cash. It's legal, it's in the tax code, and it's a total win. The key is documentation. Have an invoice, show that your home was actually used for a business event, and charge a reasonable rate for your area. So when you add all this up, the home office reimbursements, including depreciation, car reimbursement with depreciation, phone and internet, cleaning, apartment cleaning fees, Augusta rule, we are talking about tens of thousands of dollars that you could be moving from your business to your personal pocket completely tax-free. Let's say you have $500 a month in home office reimbursements, $800 to your car, $100 for your phone and internet, and you do Augusta rule for $14,000 a year. That's $1,400 a month, or $16,800 a year plus $14,000 from Augusta. That's over $30,000 of tax-free money in your pocket every year. And your business gets to deduct it all. And it's totally legal. It's simple once when it's set up, and it's what smart small business owners do to keep their money where it belongs, in their hands, not the IRS. So your action step after today: set up an accountable plan, start tracking your reimbursable expenses, and make sure you're documenting everything properly. Once you have that in place, this becomes one of the easiest and most powerful cash flow strategies in your toolkit. And by the way, I put together a tax-free cash flow checklist that walks you step by step through everything we talked about today. Home office reimbursements, auto use, phone or gas rule, all of it. So you can make sure you are not missing a single opportunity to take tax-free cash out of your business. If you would like a copy, just send the word checklist and we will send it right over. Even if you are watching this on replay, it still works. It's super practical, makes it easier to see what you're already doing and what you might be leaving on the table. All right, my friends, that's your fourth way to pull money out of your business completely tax-free and still get the deduction. And next week, we are going to talk about how to make the IRS pay for your next vacation, legally, of course. Yep, we are diving into how to combine business and pleasure trips the smart way. You will learn when travel qualifies as a business deduction and how to structure your trip and even how to write off flights, hotels, meals, and part of your family travel if you do it right. You can't write off your vacation, but you can take a business trip that looks a lot like a vacation and have Uncle Sam pick up the tab. So don't miss it. This one going to make you look at travel in a whole new way. And thanks for hanging out with me today. And remember, it's not only about how much you make, it's also about how much you keep. See you next time.